on this computer.
Let's give her.
All right, we're set. Let's go.
All right. Okay. Welcome to episode 1 of Think at Heart. Uh, this is going to be is obviously a new podcast brought to you by Hart Investment Group. I'm Scott Goodfellow. This is the namesake with me, Ben Hart of the Hart Investment Group.
Hello, hello.
Yeah, let's start off since this is episode 1, talking about a little bit who we are, who the investment or Hart Investment Group is, and um, kind of start from there.
Sounds good. So you want me to go through and give my bio and let's talk it out, and
Yeah,
then you can give yours.
yeah, sure.
Sound good?
Yeah,
Okay.
absolutely.
Yeah, all right. So I mean, look, I've been in the business now for 20 years, but I had my initial interest in the markets when I was 13. My dad was interested in the stock market, so I started following stocks. I bought TD Bank and Inco were my first stocks. I grew up in Sudbury, so as I was young, I had a lot of interest in it, but really didn't know what I wanted to do with my career. And after I had a golf scholarship and went to university elsewhere, was trying to figure out what I want to do with my career. Spent lots of time in traveling. We spent some time together in Australia, but when I was in Australia, I spent a lot of time reading Benjamin Graham, Warren Buffett, any kind of investment book I could get my hands on. And so when I came back from Australia, I knew this is what I wanted to do. This is the business I wanted to get into. I'd applied to, probably 40 different jobs at a bank. Didn't have any experience, so I got 39 rejections, but one place gave me a shot, Scotia McLeod, and so that started my business or started my launch into this business. So learned a lot over the years. Been through some of the worst bear markets of all time. 2001 was early in my career, but it definitely shaped the way I think about investing, momentum investing. We got a lot of similarities to what's happening today, similar to what happened in 2001. So I've learned a lot about that kind of momentum trade. Then we went through 2007, 2008, and obviously it was the housing crisis, and that was a seriously traumatic event for most people in investing. And so as you go through these different stages of kind of learning, you constantly think about how you want to structure portfolios and spend a lot of time learning as you go through this process. And so I've come to where I am today with a lot of wounds, a lot of learning. Definitely, we can dig into the philosophy and how I think about investing now. But that's I guess a high level, and I've worked in all levels. I've been an associate, been an advisor, been a branch manager, and right now I'm a senior portfolio manager at National Bank Financial.
Gotcha. Wow, it's quite the road trip you've been on there.
Indeed,
In
indeed.
20 years,
20
right?
years. How'd that happen?
I know, no kidding, no
Yeah.
kidding. Yeah, I think you know, we obviously have much different. You've been all in this industry for 20 years.
Yep.
I'm relatively new to it from a standpoint of, but from a standpoint of, I actually came from more of the sales and marketing background, building brands for the last 20 years, basically in the service-based industry. So when this opportunity came up to join the Hart Investment Group, Ben and I are related. Um, he's married to my sister, which makes him my brother-in-law, which is definitely it's actually worked out to be a really good dynamic.
Yep.
But yeah, I started my career kind of in the retail industry,
Hmm.
managing retail stores
Yep.
after I finished school. And then from there, I realized once we started, I got married and started having kids, I knew the retail environment, although I love that environment, wasn't going to be great for raising kids a lot of nights and weekends, as far as the peak times are concerned. So then I actually joined the family business, which was a real estate consulting business. Grew that from basically zero to a multi-million dollar business. Then I launched a marketing company, had multiple offices, 40 employees, grew that with a partner as well. And
Hmm.
now, I'm taking that experience and bringing it to Heart Investment Group, which already we've only been doing this for a short period of time, and already we're kind of seeing what the model is, and
Yeah.
kind of bringing a new angle, I think, to the whole industry.
Yeah, for
Really,
sure.
like what we have in mind isn't. There's really very few advisors or portfolio managers that are doing this kind of thing, both
Yeah.
from a client services side, the
Yeah.
systems that we're putting in place now to service our clients better and
Mhm.
just keep them informed and communicate kind of in the new media way. We've already started doing that, and we're getting great results with that. And then from a marketing, we take an education based
Mhm.
approach to marketing,
Yeah.
right? Where we're just trying to provide value.
Yeah.
Right. Every
Yeah.
time that we talk to people, we
Yeah.
are trying to tell our story about how we're different. Because
Yeah.
let's be honest, like in the service-based industries, it doesn't matter what it is, whether you're a realtor, mortgage broker,
Yeah.
investment advisor. It's very crowded. It's hard to differentiate yourself.
For sure.
But I think we have a unique story to tell, both from success and what
Hmm.
our service offering is. It's
Yeah.
vastly different. You always see, usually they see like these 1% differences. I
Yeah.
think what we have to deliver now, or what we're trending towards, is
Yeah.
vastly different.
For sure.
Yeah.
So what do you think about why advisors, and obviously you've seen it in other businesses, as people start to go online and do this kind of thing, what do you think the biggest challenge that people have to do this kind of thing?
Um, well, I think there's a few things. I think there's a lot of fear,
Yeah.
is always the main thing, right? The
Hmm.
fear of looking stupid,
Hmm.
right?
Yeah.
Especially in this industry where you're kind of making bets publicly, right?
Sure.
You're kind
Yeah.
of putting your viewpoint out there,
Yeah.
and the market will tell you and everybody else if you're wrong, right? But
Yeah.
it's the people that can be brave and
Yeah.
not really care about the losses. I mean, everybody's gonna have
Yeah.
losses,
Yeah.
right?
For sure. For
But if
sure.
you can go on record
Yeah.
early and be
Yeah.
one of the early adopters, you can have some big wins too. It's like anything, right? You're gonna have wins and losses for
For
sure.
sure. So
Yeah.
do you know what the success rate is, like for the hit rate for the most successful hedge fund managers of all time?
No,
What their batting average is? No.
no.
So
What is it?
it's about 60%.
60
Yeah,
for the best people ever.
for the best. Yeah.
Wow.
Yeah, the
Wow.
best. Yeah,
That tells you something. What's
for sure.
interesting about that, and I don't want to go too much off a train of thought, but
Yep, for sure.
isn't that funny that that's the average, but clients seem to think sometimes that you should win every time.
Yeah, exactly.
Every trade, everything that you should buy, like when you buy something, it goes, you know, it goes down, then
Yeah,
you're getting that phone call,
for sure.
r- right?
Totally. Look,
Yeah,
I mean, we can talk about lots of those opportunities, lots of those things that I've seen. I can win, 36 out of 50 trades in a year, but everyone wants to talk about the 14 trades that I screwed up. Like
yeah,
what happened there,
yeah,
and I mean that's for something we can dive into as we go.
for sure.
But you're right. That's what people want to look at.
Yeah. So let's go into a little bit about the again, because there's so many different trains of thought and ways of thinking in
Sure.
this industry.
Yeah.
What's the way of thinking of the Heart Investment Group?
Yeah. Yeah, so I've because I've worked at all different levels of business. I've seen probably 70 to 80 advisors run their practices. One as a from a management perspective, I've seen what works, what doesn't, and my focus and our focus has always been on, like, let's make sure we're driving results for people. This industry, like most sales based industries, are based on revenue. Like, how much revenue am I generating? And one of the things that I got frustrated about early in my career is, guys are getting rewarded for making a lot of money for themselves. But when you dig in to look at their performance numbers, they were horrible. They're losing money for people consistently, yet the firm had no interest in it, and clients didn't seem to know what was going on because reporting wasn't very good. So, our philosophy is, we got one job to do, and our job is to make sure we drive portfolio returns from a risk adjusted basis. And so, this industry doesn't talk very much about risk. It's all about return. What's the return profile? You go into the bank and they say, here's the 5 profiles: your conservative, your income, your balanced, your growth, etc. You pick one of those 5 buckets, and then they slam you in that fund, and hopefully it performs for you. What that doesn't take into account is that risk is the deciding factor on that, as well timing is. And so, if you kind of hear a lot of these quotes where it's not timing the markets, it's timing the markets, that makes you successful, right?
Right.
Like that, in my opinion, is BS, because you tell an investor that bought the March 2000 peak of the Nasdaq, they're a decade plus before they're making money, if they stayed with that trade. They probably didn't, but
Right.
if they stayed with that trade. So you tell that person time in the market is what is all it takes. And I think that's a misrepresentation. So anyways, we focus on managing portfolios from a risk adjusted basis, but ultimately it's about driving performance.
Right. Exactly. Yeah, I mean, that's probably been one of the biggest shocks that I've had since coming into this industry is, talking to other advisors and different associates that I've seen around the office, and most of them do that, they pick a fund and they stick their clients into it, and they really don't worry too much about what the returns are, right? Because they don't really have any control over it, right?
Right.
Nor do they want it,
That's right.
right?
Yeah. Yeah.
Because there's so much research and so much risk. I don't probably risk isn't the right word,
Yeah.
but they have that fear. They don't want to be wrong,
That's
right? They
right.
rather
Yeah.
give it to somebody else to be wrong
That's right.
if they're going to be wrong,
Yeah,
right?
for sure.
And then as soon as if that fund is up for the year, I'm sure they're the first one taking all the credit,
Yeah, of
right?
course. You get a lot, and you get a lot of performance chase, right? So you get
Yeah,
the guys that want to buy the fund that did great last year,
yeah,
when the better trade is to buy the fund that hasn't performed as well, because it's likely to perform better. But that was the biggest, you know so I converted to be a portfolio manager about 6 years ago. But in 2008, when the market was cracking down, I was in funds and SMAs, which are separately managed accounts, where you're using like Jaroslawski Fraser and Foist and Gordon and these institutional money managers that you thought, well, these guys must have their fingers on the pulse, right?
yeah,
And they're going to outperform because they always have.
yeah,
And that wasn't the case. Those managers, maybe they were down 35 and the market was down 40. Well, look, at clients don't care that they outperform the market by 5%.
yeah,
They've lost 35% of their capital.
yeah.
Yeah.
Exactly,
Yeah.
exactly. Well,
Yeah.
often hear that too, like, over the long period of time or over the long term, you know, it's really hard to just outperform the market,
Mhm.
right? Like
Mhm.
people are just say, oh, are encouraged to just put their money in index funds or
Funds. Yeah.
whatever it is.
Yeah.
And why do you think that's not the right play? Like,
Mhm.
do you think that advisors and portfolio managers can outperform the index funds?
Yeah, I do. I mean, I think that generally people want to talk about the market, though, where the objective is solely to outperform the market.
Mhm.
I think that the one thing that we continue to miss is the risk, right?
Mhm.
So, if like this past year was a great example of that, right? Coming into 2020, my expectation was we are going to have a mild recession based on where we were in the economic cycle. COVID obviously was the pin that pricked the bubble. So my with the view that I thought something bad was coming, I had index puts built into portfolios, that when the market dropped, we'll call it 40%, portfolios are down 6-8%. And while my performance this year was based on the first 6 months of the year, because I was managing for risk, where most people, I don't want to say got lucky, but because they held on to it, their performance was in the second half of this year. So, net, we probably had similar returns this year, but we didn't have the crazy ride that most people had. 40% drawdowns followed by kind of a retracement, where it's gut wrenching for people.
Right.
You got $1 million portfolio and you're down 60 grand. Well, you can live with that. If you got $1 million portfolio and you're down 400 grand, you're gonna be panicky.
For sure. Yeah, it's hard to sleep at night, right? They probably had a few months there where, they were unsure about what was going to happen to their money long term.
Yes.
Absolutely.
Yeah.
Absolutely.
So as for index funds, I mean, I think that'd be a podcast we should do exclusively, to
Yeah.
dive into where and how and where they're appropriate and should they be appropriate. And I think the answer is we use them in our strategy. We use
Hmm.
ETFs, yeah, for one reason or another, depending what we're trying to get exposure to. But buy it and forget it, as we've talked a number of times already. A buy it and forget it has to have the view that the next 40 years are going to be like the last 40.
Hmm.
And that's not my view. It's not our view.
Right.
Yeah.
Right.
Obviously, as we dive into crypto and talk about money printing and stuff like that, we can go into why we think that
Yeah.
way. But
Yeah.
yeah, yeah,
Well, let's take that opportunity then. It might be a good segue to go into like, so what is it that we're looking at right now as far as, investment strategy and just where the world's at and what we think, what we're interested in, let's call it that, what we're interested in right now.
yeah. Yeah, I mean, I think that it's a great question, and yeah, I try to look at the world from a multi-pronged approach. What do I expect to happen over the next 3 to 6 months? What do I expect to happen over 6 to 18, and then 18 plus? And so when we'd construct a portfolio, we'd look at those kind of different levels, and put investments that fit into those different buckets into portfolios. So, from a 3 to 6 month perspective, yeah, I think we're clearly in an inflationary environment right now, with increasing growth as well. So, with that kind of setup for the next 3 to 6 months, you want to have assets that do well typically in that period, which is energy, consumer discretionary, commodities, maybe some of the beaten down, like airlines, cruise lines, those kind of things. You got this kind of reflation trade happening. I think it's temporary, but I think that's what's happening right now. And then you'd look kind of at the medium term. You probably can have some bonds within the portfolio, maybe some emerging markets, bonds and convertible debentures. And then you go that 18 plus month, kind of time frame, which I would call the kind of the tail, the long term things we want in portfolios. And so, that's typically where the longer, more exciting things are. And so, what's fallen into that bucket in the last, let's call it 14 months for us, is cryptocurrencies. And so, I started following them pretty seriously in probably 2018, as cryptocurrency took off, went from, kind of a couple $100 to 20,000 in the year. My view at the time was that it was a bubble. Um, and up until the end of 2018, where the Chicago Board of Exchange was the first, um, in exchange to actually offer futures contracts, and the first opportunities for institutions to buy them, but more so for the institutions to short them. So because we had that big run up, there was no ability to short them and kind of put some pressure to the downside. So on the back of that, we saw, kind of a 80% retracement when crypto went from, 20,000 down to a few thousand. And then as we started to come into this year, as I wrote in my annual report about a year ago now, saying I think Bitcoin and cryptocurrency was an asset class that we should consider within portfolios. Then as we got into kind of spring of this year, I started to get serious about seeing how do I put this into portfolios. I attended a crypto conference run by Real Vision with Raul. He brought in kind of the best of the best, and learned and studied this, this understanding of what crypto was. Um, by no means am I an expert in the space, but certainly it's something that I thought was important within portfolios. And so, fortunately, around April, May of this past year, 2020, 3IQ brought the first closed-end Bitcoin fund to the market. So I had the ability to buy on behalf of clients. I put it in portfolios in May. Obviously, lots of pushback from my firm, as they didn't think it was an appropriate asset class. And ultimately, I'm trying to look for things that diversify portfolios, and this was one that did.
For sure, and you mentioned that you had pushback from the firm. That's something that up until just recently, and again, talking to other advisors, I mean, nobody else was looking at this, nor was there a way really to buy it, right, and put in
Yep.
people's portfolios.
Yep.
You had to go through, one of the online offerings like a Coinbase or something like that,
Sure.
in order to buy it. So that's great. But yeah, like talking to other advisors, I mean, nobody was considering that to put that in your portfolios, right? It was often seen as gambling, a little bit too high risk. But I think like anything like that, anything new, a new asset class like that, people are it's just more fear based, right? People don't know
Yeah,
what it is, and
for
they
sure.
still don't know what it is.
Yeah, for
And you
sure.
mentioned, I mean, we're going to talk more about crypto as we go. We'll do like some more specialized podcasts just
Yeah,
on those,
sure.
to really explain exactly what it is and what it
Yeah.
means for the future. But
Mhm.
it's essentially lining up as the future of currency is basically, the way that it's lining up, right?
Yeah, for sure. And I mean, it's right and true to your point. I mean, I've always had kind of a biweekly call with a group of advisors who think a little bit differently than me, but certainly ones I respect. And when I pitched this and brought this to the table in April, they thought I was off my rocker. So, I think ultimately, though, the one thing I'd like to clarify, though, is you don't need a 50% allocation to this in your portfolio for it to have made a difference last year. We talked about this off camera before we came on, and I mentioned to you, if you had a 99% allocation to cash, a 1% allocation to Bitcoin, you outperformed the S&P 500 last year. So, it's not like you need to go out of your mind with this. It's
Yeah.
just, thinking about where it plays into people's portfolios.
Yeah. And it's unbelievable how much credibility you just gained in the last 3 months,
Yeah.
right? You
Yeah.
get like Paul Tudor Jones and a few other massive and institution money starting to come
Yeah.
now too. And,
Yeah.
just now, some of the banks, Canadian institutions are starting to recognize it, right?
Sure.
So, and
Yeah.
offer it in people's portfolios. So
Yeah.
I know it's been a bit of a fight for you just to get it in your clients' portfolios, but definitely makes you look, like a genius now, doesn't it?
Yeah, well, it's worked. It's worked. But there's lots to think about, and we can definitely go down this rabbit hole. And there's lots of sidebars to go onto this. But I
For
think
sure.
as the one thing that both you and I share is that we have this kind of constant thirst for knowledge. And
Yeah.
so we got to keep learning, and we got to keep thinking about what's around the corner. I've always prided myself on trying to look ahead, and this business is always focused on looking back. And so I can't sell you yesterday's returns. I need to look ahead and see what's ahead, and buy what's going to do well for the next 6-12 months, or and long off into the future. And that's where the magic happens.
Yeah. I think we're in such a crazy time right now. I think the one thing that's just becoming more evident is change is just coming at such a rapid pace now that if you can't adapt to it, you're going to be left in the dust, right?
Yeah. Yeah.
So, people just taking taking their time to make decisions and like all that's over, right?
Yeah.
If you're
Yeah.
not ahead of the curve now and making decisions and staying informed of what's, with the industry and the world, economy and whatnot, then you're going to be left in the dust. And I think
Yeah.
you can't just sit back and wait anymore, for
Yeah.
sure.
Yeah.
Yeah.
Yeah, I think you're right, and that's where I've tried. I've looked. I've paid for multiple research sources over the years. I've looked at hundreds of different, reporting systems, and CIBC and Scotiabank and Credit Suisse, and all these investment managers. And initially coming into this business, I always thought, like these guys know way more than me.
Yeah. Yeah.
But then as you learn as you go, they make decisions that are different than what it is that clients want, or what it is that you want, or what it is that you need. And so you got to find a place that you can be comfortable with, you know who's adapting as well with the future. And so that's where I've come on with, at least for the last couple of years, I've been following Hedgeye, which is a risk management company that provides real-time data that helps with the trading decisions that we make. A couple of other sources that we can dive into as we go. But it's a matter of aligning yourself with people that can provide inputs that help you make appropriate decisions. And so that's really changed too. I mean, Real Vision, who I mentioned, they're really trying to give us access to the best and the brightest, where we would have never had access to before. They interviewed Paul Tudor Jones, Stan Druckenmiller. I mean, Stan's probably the only guy that's never lost money in 30 years. Typically you don't have access to these kind of brains, and now you have the ability to get into the way they think. Stan's a classic example, where he talked about his trading in early 2000. The market just kept going up and going up and going up, and he was like, I'm an idiot for not being long the market. And so he swayed from his process, and then lost a couple $1 billion when the market turned against him. And so what that taught him is that you got to think about what's happening at all times. You got to learn and get better and listen to what the market's giving you.
For sure.
Yeah.
So, I mean, that's the thing, right? Is everybody has access to this information,
Yeah.
right?
Yeah.
Certainly in this day and age, everybody has access to it, right? It's
Mhm.
it's a more of kind of filtering through what's important, what's not,
Yep.
right? And
Yep.
just having the time to do that, right? You look at these, like the online brokerages, like the Robinhoods and the what's it called? Simple Wealth.
Well,
What is it?
simple.
Well,
Well,
Simple.
simple.
Yeah, I
Yep.
just got it mixed up.
Yep.
But you know, and you look at those from an investment side, and you're like, I think a lot of people would argue that's going to be the future of investing, right? Oh, like people can do this on their own. They don't have to pay the fees, whatnot. But what does that give you? What does that give you versus somebody like you?
Yeah. Yeah. Yeah, so that's a great point. I think part of the decision to come to National Bank Financial was, I was thinking about what they were doing as well. They have some strategic partnerships with some online firms from a kind of structure perspective, and you got to think about what's happening ahead of you for sure. And I think our business is changing a lot, and so what I do is completely different from a Wealthsimple or Robinhood. Wealthsimple is the same as a bank from the perspective is they jam you into kind of a fund to fund or an ETF of ETFs, where you buy a basket based on your risk profile. But I think the biggest thing is people don't understand their risk profile.
Yeah,
Like if I say to you today, the market's at an all-time high, what's your risk profile? You're going to tell me aggressive growth.
yeah.
At the bottom of 2008, what's your risk profile? Conservative. Like people completely adjust to the cycle of the market. They don't
For
they
sure.
don't they don't make a decision based focused on that. I mean, so that's a part of what we do. Obviously, we're a full service team where we do financial planning, we do estate planning, we'll help you find accountants, lawyers. So we do offer that full, full service investment offer.
Yeah.
And that's one of the things you don't get from a self-directed, we'll call it.
For sure. And the reason why I'm asking these questions isn't to be like a commercial for what we're doing. I think
Yep.
it's because this is episode one. I think that it's just to kind of set the stage for who we are, what we do, how we're different, what kind of the overall worldview is, what are, the overall strategy is compared to what everybody else does
Yeah.
and whatnot as well. And how, and maybe exactly what you just did is talk about where the industry is going, what new services are going to be out there. Like
Yeah.
you said, like they're, the industry is changing like crazy, but
Yeah.
to be honest, what industry isn't right now?
Sure. Yeah.
What part of the world isn't changing?
Yeah.
You know,
Yeah.
whatever, anything that isn't, overrun by the internet, that's just, everybody wants to cancel every service-based business by the internet, right? And they think, oh, well, we can have an app for that and then we won't
Yeah.
need advisors. Same
Yeah.
thing with real estate. I've heard it I was in real estate for 20 years,
Yeah.
right? I heard in real estate forever, oh, we have these fee for service now where you can pay $1,000 and they'll come in and do all the same things. Well, those never work because you don't get the same value,
For
right?
sure. Yeah.
For sure. So I
Yeah.
definitely, after being in this for a while, I see a very similar parallel to that where,
Yeah.
it's just going to, all the online services just going to be able to enhance
Yeah.
the advisor's role, right?
Right.
It's going to
Yeah.
give us better tools to
Yes.
service the client better. And I
For
think
sure. For sure.
advisors that look at it as like that and aren't afraid of those things and fight
Yeah.
against them and try to keep it in the old way
Yeah.
and use those tools as we're doing right now on this
Yeah.
podcast
Yeah.
to educate clients are the ones that are going to win.
Yeah. Yeah. For
Yeah.
sure. Yeah, and look, the average advisor in this business is 58. So it's an older business.
Yeah.
And so lots of people aren't adapting, don't want to adapt, don't want to hear it,
Yeah.
don't want to think about the fact that the business is changing. And so that's, I mean, certainly a great opportunity for us. But I come from the view that clients pay us to manage their money, and manage their portfolios. They don't pay us to sit back and give the money to a mutual fund company or to somebody else to make those decisions.
Right.
Ultimately, the buck stops with us. And one of the, I guess, differences between a portfolio manager and an investment advisor, which is something you'd asked me about before too, is that an investment advisor kind of manages beside you. Like you and I, Scott, I would say, hey, Scott, what do you think about, what's your risk like? And you'd tell me I'm willing to take a bit of risk. And then I would put a portfolio in front of you and you'd have to say, okay, yeah, I guess so. That makes sense. And then every time we do a trade from that point on, I call you up and say, hey, Scott, I want to sell Scotiabank and buy Royal Bank. And you have to say yes or no. So it's kind of a co-relationship where a portfolio manager like myself and like our team is we have fiduciary duty to do what's right for our clients. And so everything that we recommend and put into portfolios, we have a legal obligation for that. And it's a real different offer than people are probably used to and aware of.
Yeah, for sure. And that's a good point too. Like how many, what's the ratio of portfolio managers to advisors? Like are there a lot more advisors than portfolio managers out there?
Yeah, for sure. For sure. And there's a lot of portfolio managers that call themselves portfolio managers, and really they're either closet indexers where they just buy an index and do that, and or just carry the title but don't actually manage money from a discretionary perspective. So it's a fairly
Gotcha.
narrow group.
So what's the benefit then to the client to being with a portfolio manager rather than an advisor? Like,
Hmm.
if I have my money with somebody, would I not want to know every move they make? Like, is there a real value to me,
Sure.
or it's just less of a hassle because I don't have to deal with it as a client?
Yeah, so it's a great question. So I ultimately, as I thought about it and started to think about, some of the challenges you have when you're growing a business too, is, I get clients, say we got 120 households, um, and I get clients from $15 million to $200,000, and so ultimately my job when I tell somebody, maybe this is the son of an important client or daughter of an important client, I want to give them the same returns as they're getting. As an investment advisor, you can't do that. There's no way. You can't manage money across the book and give people the same type of performance. And so one of the things I thought is, I want to give people what I promise, which is here's the returns. So I'm expecting to deliver that. And so when I execute a trade, say we're going to buy, um, you know, uh, we're going to buy a stock, um, today, say for example, I'll just obviously give you an example of a trade that we did last week, which is probably a good one. Is I wanted to buy U.S. financials, and so in order to execute that trade, I wanted to go ahead and make sure all of the clients that were in my discretionary portfolio got filled at the same price. So no matter where you fit on that spectrum, you're going to get that same fill price. And so what that means is that the clients are going to get the same returns. They're going to get better execution. They're going to see and know everything that goes into the portfolio. And so as I went into this, that was something I asked myself. As I went back and I had written down, kind of the 50 trades I did for clients prior to becoming a portfolio manager, and I looked at, and those people that I kind of hemmed and hawed on, I call you up and say, you might say to me, oh, well, Ben, do you think this is the exact right time to do this, or should we wait a couple of days? And so as I looked at that and went back and saw it, is that the right thing to do for them? I'd say 2 times out of 10, it was the right thing to wait. But the other 80% of the time, it wasn't. And if you don't execute based on what's happening at that specific time, then you've missed the trade. And so I just found that it wasn't a consistent way to make money for people. And to your point about how the market and how the world's evolved, like you got to execute quickly. And if you can't do that, then you're doing disservice to clients.
Right. Because that's the thing too with an advisor, right? Like if they represent 150 households, if they want to make a bulk trade, they had to make 150 phone calls just to make that happen.
That's
And
right.
usually how long would it take to do that? 3 days,
At
at
least,
least,
at
maybe a
least.
week,
Yeah.
right? And by
Yeah.
that time, the opportunity's gone,
That's right.
right?
Yeah.
So, absolutely. Well, that's interesting information to know. And you know what? It probably, because you've been doing it so long, it's probably second nature to you, and you probably don't think of it that often. But certainly, I think the average person doesn't know the difference between what an investment advisor and a portfolio manager does. That's for sure.
For sure. And
Right.
look, I don't want to keep hammering on crypto, but if I came to the 100 clients that I put it in portfolios for in May of this year, imagine I had 100 phone calls with people telling them I'm going to buy Bitcoin this year.
No.
I would have got 10 of the 100 people in it.
Maybe.
Yeah.
Maybe.
Yeah.
Yeah,
And I would have
exactly.
beat my head against the wall.
Exactly.
Yeah.
Exactly. Well, okay, well let's finish this off with talking about what this podcast is going to be moving forward. I think this podcast is mostly to set the stage. This is episode 1.
Yeah.
So who we are, what we do, how we're different,
Mm.
what our worldview is. Now, what do we want to do? What value are we going to give to people out of this podcast on a week-to-week basis?
Yeah, so I think that how you started when we talk about the education piece, I think that's certainly something we'd like to do.
Yeah.
I've always thought that finance or investment was very opaque. for people, and I'm hoping we can kind of take down some of those walls and really kind of maybe peel back what the business is about, what the industry is about, and hopefully educate some people around that. And ultimately, we want people to make informed decisions in their life, and hopefully we can help address that as well.
For sure. Yeah, I mean, I think too, what's important is that, like you said, we're gonna bring you the best of the best and what's relevant at that time, right? So,
Yeah, yeah,
so for example, I know we keep saying talking about crypto. Why do we
yeah,
keep talking about that? Because it's relevant. It's easily
yeah.
the biggest news and investment world right now.
Sure.
Right, so that's what we're going to continue to talk about. We're going
Mm,
to do specific segments on that. We're going to bring in some experts, do some interviews, and
mm,
not just on crypto. We're going to
sure.
do, we have tax season coming up. We're going to
Yeah.
have episodes on taxes,
Mm,
whatever's relevant at the time. We're gonna talk about it, and we're gonna do that. We're gonna educate people on what's interesting in the world and what's interesting in the market as far as the investments are concerned, and what the opportunity biggest what we feel from our worldview is the biggest opportunities coming up.
for sure. For sure.
Right.
Yeah, absolutely.
Absolutely.
Yeah.
Absolutely. Okay, do you have anything else you want to wrap up episode 1 with?
No, I don't think so too much. I guess the only thing I would say is we'll try to put out as much as we can. We do post on LinkedIn and the other sources as we'll get better at this. But LinkedIn kind of is the one where we've spent the most time on right now. And
Mhm.
so if people are interested in kind of following along the thoughts as the week goes by, please look for us on LinkedIn. But I'd say that's it for now. I mean, look, I could talk here all day, and we got lots of things we can go into and talk about in more detail.
Yeah.
But I think that's a great start.
Yeah, absolutely. Okay, so yeah, well, that wraps up episode 1. Thanks for tuning in, and we'll catch you next week.
Thanks.